Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Hope everyone is first of all, hope everyone had a great weekend and hope everyone's ready for yet another interesting week as we go through this month of January. So this is a regular week. It seems like we really haven't had a sort of regular full week this month. It almost feels as if January is still trying to get started. And that's because we've had a lot of stops and starts throughout the week. We had a non-farm payroll that basically backed up Jerome Powell's messaging in mid-December, the 18th to be specific. Hard to kind of miss that date because it's pretty much got a big down candle on every daily time frame on that date. But what really happened since that time is Jerome basically said, we're pretty much done cutting rates. One, maybe two rate cuts to go. Two would be really generous. One at this point, even getting pushed further out into the year. And that is because the jobs picture, mostly starting with non-farm payroll last Friday, continues to point to the fact that the employment picture is healthy and that the current monetary policy really probably doesn't need more, according to them, right? This is not what I think. It's just the way the data is playing out. But according to them, probably doesn't need more accommodation. And we continue to see the heaviness. The heaviness could be a lot of things. Clearly, there are a lot of things that are creating uncertainty. And while we can't necessarily always put our finger on it in terms of cause and effect, that's not really our job as traders, because as traders, we've got to acknowledge that the number of things we do not know will far outnumber, probably 5-1, the things that we do know. But what we do know are the four factors of trading. Price. And by the way, most traders stop and start there. Price-based indicators, etc. Right? But if we add another element, pretty basic one, time. Now we look at the time of day. We look at the week and know that there's a rhythm. We look at the month and know that there's a rhythm. We look at the quarter and know that there's a rhythm. Right? And then if we want to take it one extra factor, now we can take a look at volume. What type of volume is at each price point? That tells us a lot about attention. That tells us a lot about size and commitment, right? And the last one, which is probably the least considered because it's probably the toughest to calculate, is volatility, right? What is the historical volatility of a particular symbol and where is price in relation to that? Because that tells us a lot about, are we acting quote unquote normally, or are we acting outside the norm, which brings us back to the whole point that we will not necessarily know the details of what is moving a particular symbol, but we can see if it's something abnormal or not. And that's going to help us start to dig a little deeper rather than assuming that every down day is a panic day. Sometimes there's just more selling pressure than buying support. That's it. Nothing goes straight up. Nothing goes straight down. And we are in bearish chop right now on the S&P. Why is it tougher to trade a non-trending market? Follow through, gang. If you're wondering, has my indicator or whatever you're using, right? We're all using probably a number of different tools. If you're here in Charts and Coffee, I would fathom you're either learning about top tier and hourly price movement ranges and daily price movement ranges and things that I do. For all traders, and I'm going to say all because yeah, there might be a small fraction, but let's talk about the vast, vast majority of traders. They do better. I do better. We do better in an uptrend because the probability of follow through is far better, period. That's it, right? That's what we loved 2020. That's what we loved Q1 of last year and actually most of 2024. Uptrends are the easiest type of market behavior to trade. Downtrends are not the opposite of an uptrend. They're more volatile, and the follow through of a downtrend is far less. It's very seldom you're going to look back on a year like 2024 and have it upside down, meaning that we trended lower for the entirety of the year. But it's not uncommon to see a whole year and that we generally trend higher for the entirety of the year. There might be small spots of weakness. I think we had at least 3 distinct bearish points that were very brief in 2024, but the overall movement was higher. So it is easier to trade uptrends, and downtrends are not just the opposite of an uptrend. They're actually shorter. They're more volatile. Frankly, they're more violent, right? The panic button, the sell now button gets hit a whole lot quicker. with a whole lot more fear than I'm optimistic, let's buy, right? FOMO, by the way, is a type of fear. Absolutely, right? Buying into momentum, for the most part, for the vast majority of traders, really is a type of fear. So when we take a look at what's happening right now, it's actually chop, but bearish chop on the S&P and the NASDAQ. The Dow is in a downtrend, right? The four indices, if you want to include the Russell in that look of the indices as opposed to just NASDAQ, S&P, Dow, the Russell is also in a downtrend. Now, different indices can move differently because of the composition of the stocks within them, right? 100 NASDAQ tech, mostly stocks, right? It's mostly tech with a little bit of consumer discretionary, tiny little bit of healthcare, tiny little bit of financials way down the list. But for the most part, it's a bunch of tech stocks. It's a bunch of consumer discretionary stocks. All right. You move on to the S&P, a lot of tech, a lot of financials, healthcare, energy. You move on to the Dow, it's mostly financials, a little bit of tech, a little bit of healthcare, a little bit of energy, a little bit of industrials. You move on to regional banks, and now you're talking about more of a Russell conversation, small cap. So they're going to move for different reasons. They don't all have to move together because the composition of the individual indices is so different. So that's why we need to treat them differently. Yes, it's far better when there's broad risk appetite. In other words, folks want to buy stocks and they want to buy nearly all of them, of all sorts of sectors. But for the most part, if we treat each sector as the individual that it is, and we look back on the NASDAQ versus S&P versus Dow versus Russell, if you're somewhat optimistic, do so in the NASDAQ, right? If at all, quite frankly. If you're more bearish, do so in the Dow and the Russell. Follow the things that are already in the structure of weakness rather than presuming that they're going to play catch up. Now, there are a few symbols that are already in downtrends. If you want to go individually to certain symbols or to certain sectors. For example, if you want to focus on the bearish side of healthcare, probably not a bad idea. I certainly wouldn't be a bull. There's a little bit of a bounce in bearish chop, a little bit of a bounce in a downtrend. Let's not confuse that with strength. Sometimes downtrends do bounce, just like sometimes uptrends do pull back, right? We don't take that small little window of behavior and paint the whole ongoing trend with that expectation. That's where a lot of traders get into trouble. So here's where we are. Far fewer sectors moving higher, far fewer individual stocks moving higher, a lot of bearish chop. We don't have a ton of downtrends either. Chop is the account killer. So how do we deal with it? Get far more discerning about what we're going to trade and the pace of trading. My pace of trading in Q1 of 2024 is nothing like my pace of trading in Q1 2025, right? So we have to say that we have to acknowledge that certain environments are going to very naturally reduce the number of opportunities we have, reduce the number of trades we have, and we just wait for clarity. And again, this is where traders get really hurt. They persist in imposing their will on the market when in fact that just isn't going to work. So right now, I think as of Wednesday, I'm flat swing trades. We're still looking for day trades from time to time, but I'm flat right now. And I can't recall the last time I've been mostly flat or with so few positions in the last 12 months. That's the difference between the environment we're in now and the environment that we've been in through 2024. All right. So with all that being said, and hopefully those are a few things to think about. These are the kind of things that we do in the Sector Secrets Mastery. We take a look at the entire environment. We take a look at all the sectors and the indices and individual stocks and ask, where's our edge, right? The edge is not always going to be the same from day to day and week to week and month to month. And that's probably our first job, just to acknowledge that. All right. That being said, there's a couple of things that are sort of interesting in the commodity space, and crude oil is definitely one of them. Crude last week, we talked about last week, not only in the Sector Secrets Mastery, but I believe here in Charts and Coffee as well, that we want to see crude above 76. And here we are, right? So when I see movement like this above the equator, which are these white dots here, we're in the bullish hemisphere, not by much, but that's a pretty big threshold to have covered. And interestingly enough, as we've covered that threshold, take a look. We're actually trying to form an uptrend in crude oil. So as long as that can stay above, say, 76 to $75 a barrel, now I'll start taking a look at things within the energy, within oil services, within oil and gas explorers. But it really all starts with crude oil. So let the commodity that guides a lot of what's going on in those commodity related companies, those commodity related stocks. Let the commodity go first. Same thing would apply to, say, gold and gold miners, right? Let gold go first, then take a look at what's going on with gold miners. So I think it's definitely an interesting turn of events for crude. And we haven't seen an uptrend in crude of any length since July of last year. So this is pretty significant where we are right now above the equator with a very fresh uptrend worth putting on the watch list. All right. So let's see what else we have here. And as always, I'll look for those questions. GR, good morning. I wanted to take the time to thank you. Oh, thanks. I appreciate that. Thank you for watching. Otherwise, I'd be talking to me and my coffee. For sharing the Swing Success Rules video. Oh, absolutely. Awesome insights. Yeah, what was it, Tuesday? I did a video on just the principles that allowed us to grow accounts in 2024, right? Not one quarter, not 5 really good trades. What is it that we did over the course of 12 months consistently, right? So we can create that consistent account growth. A lot of folks can have moments, bursts of account growth, and then they have, sadly, account implosions, right? And that's the difference between looking at a month or a quarter and saying, hey, this is what we've done the last 12 months. And so that's what I shared, a lot of the insights into consistent account growth in 2024. I'm so pleased that that helped, GR. I appreciate it. Thanks for watching and thanks for letting me know. All right, next up, FedEx for a short. I think there are better places to find downtrends and short. In a case like FedEx, I agree. I would be bearish or nothing, right? We should be able, and that's a really important principle. We should be able to look at any symbol and be that binary about I could do this or I could do nothing. I could be long or nothing, short or nothing. If you ever look at a chart, I don't care the time frame, I don't care the sector, whatever. If you ever look at a chart and say, I could be long or I could be short, I promise you there's no setup there. Okay, there's not much I can say about, I can't guarantee anything, but I'm telling you right now, if you're ever looking at a chart, 1 minute, 5 minute, weekly, monthly, whatever, and say, well, I could be long or I could be short at this moment, there's no setup. So the first job is, am I bearish? Yes, agreed. Where would I be bearish from would be the next part of this. So that's going to go down to a very simple Ragheeism that we have in the Sector Secrets Mastery, which is structure dictates strategy. Most traders do what? They find their favorite indicator or the indicator of their favorite trader, and they just use that again and again and again. That's akin to grabbing, your favorite club out of the golf bag and just using that for the entire 18 holes, right? There is a club for that shot. There is a proper club for the shot that you're going to take. Same thing goes for the indicators, right? There's an indicator, there's a strategy that's best for that shot, for that setup. So that's why structure dictates strategy. And strategy then, would dictate the indicators that we use, the secret squiggles, as I like to call them. So in this case, the trend that was down. The candles are red. Absolutely bearish. I'm with you, Jess. And now the question is, from where? I would look from resistance because this is not a trend any longer. It's bearish chop. So bearish chop, rather than waiting for a mean reversion, rather than treating this as a trend, which it's not, I will treat it as bearish chop where I want to wait for the confirmation of an overbought resistance level and buy puts as price rallies into that level, right? Not as it sells off through support, right? As it rallies into resistance with the presumption that in a bearish environment, ceilings will probably hold. Resistance, selling pressure will probably, again, probabilistically hold. That's it. All right. So yeah, I would agree, but just not at current levels. No, not at all. I would not short into weakness. All right. Next up is keeping an eye on XLE. I got long on Friday. We'll likely get out today. It's too early for me. Yeah, it's too early for me. This is actually a lot like FedEx in terms of Jass's question, Luch and Jackpot. I would say that much like FedEx, mostly red candles, the trend that preceded the current bearish chop is down. So now I'm going to wait for some sort of resistance as we rally into sell into, right? So I can't even get long a chart that looks like this. But this is the daily time frame, Luch. So I don't know what time frame you were on. Getting long Friday doesn't give me the picture of what you did. Is it long on a 1 hour trend? Is it long on a short-term swing? Is it long, you know what I'm saying? So I'm looking at a daily time frame here. And this is absolutely red candles. I'm not allowed to buy calls. That's how important the top tier tools are for me. Those top tier candles will tell me, Rog, if they're red candles and you've got at least 5 of them, you have far more bearishness than you have bullishness. Be patient, wait for a resistance level, buy puts into that. So as far as individual stocks in XLE, are there individual stocks that might look bullish? Oh, let's take a look. So open up XLE. And ultimately what I would say when it comes to XLE is you want to find at least some green. So yeah, there is one symbol within the XLE that might be helpful, to the long side if you want to be a little bit aggressive bullishly, which I wouldn't recommend, but if that's something you've got with a longer time horizon, I would say Occidental. Occidental would be your best bet and then maybe keep an eye on EOG. So what I'm looking for is at least some green candles, maybe 5 in a row or better. And that's why Occidental is well on that way. Occidental is got 1, 2, 3, 4, 5, 6, 7. And EOG has 2, 3 more green candles. That would be at least more bullish than bearish. And then everything else I'd probably leave on the back burner unless you want to take advantage of weakness. And that would be most definitely XLE itself, Exxon, Chevron, PSX, Schlumberger, SLB. So what you'll do is then flip that around and say, well, if Raghee's looking for at least 5 green top tier candles for bullishness, let me find at least 5 top tier red candles for bearishness. And so that's the way I would look at that. But again, gang, I'm looking at the daily here. Nobody knows what's going to happen next. But if there's anything that we do in the Sector Secrets Mastery, if there's anything that I've done throughout my career, is accept the fact that none of us predict what's going to happen next, although a lot of folks like to pretend. None of us can do anything other than say, when we see whatever it might be in the chart, pattern, indicator, setup, the probability is we win more often than not. So we all play probabilities, and experience or getting education for someone whose experience gives us that scenario, right? We're looking for a scenario on that chart that tells us, oh, last time I saw this is usually the outcome of that look. And then we just apply it again and again and again. All right, gang. So that is it. I will see you all tomorrow, same time, same station. Be good to each other. And just a heads up, next Monday we have a bank holiday, but this week we have a pretty normal week. We're still coming off that really good non-farm payroll number, so things will likely remain kind of heavy. So be patient if you're a bull, and if you're a bear, find the weakest stocks, look for long puts on rips higher. All right, gang, until then.